Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Russell Rhoads, Director of Research at EQDerivatives, with an update on the Nasdaq-100 Volatility Index, or what we call VolQ. And Russell, it's a good time to take a look at this as we kick off the trading week of February 22nd. It's a little bit choppy in the Nasdaq-100 this afternoon.
It is. It's a little bit choppy. It's a little volatile. Last week, you heard folks talking about how the volatility indexes, VolQ, was much higher than the realized volatility that we've seen over the last few weeks. But VolQ is forward-looking, and the market activity today is definitely matching up with a volatility index in the mid-20s like it is right now.
So what does that suggest going forward, potentially? We're in for a little bit more of this. Has it topped out at all? Or what can you read from the tea leaves here?
Like I said, it's a forward-looking measure, and as long as VolQ is up in the 20s, you've got to expect that we're going to have some days like this where you just get a 1, 2, 3% move without a whole lot of news pushing it in one direction or another. Just people starting to maybe position themselves for the balance of this quarter, definitely into the middle of this year, where you see volatility in individual option contracts also at kind of a heightened level. So I equate it, and I know a lot of people get upset when you do this, but I equate it to when we came out of the great financial crisis. It was just everybody seemed to be on edge for a lot longer than you would have expected, and that's how it feels right now. Even when the market's acting well, volatility expectations remain high, and they remain high because people don't think we're quite out of the woods yet.
So, Russell, I believe it was last Friday, you put a trade up on Nasdaq.com to sort of, play what's going on in volatility right now. Tell us more about that.
Sure. About mid-morning on Friday, somebody came in and put on an iron condor with NDX options that expire on Wednesday, which is just great that we have Monday, Wednesday, Friday expiration, so you can really pinpoint an outlook that you have. The Nasdaq 100 was around 13,660 when they put it on. The short put strike was 13.3, which we're kind of close to right now, and the short call strike was up around 14,000. The range was wider than 5% for 3 days of market activity. Which goes back to VolQ, which is the range that you're going to get if you're using standard deviations with respect to the strike prices you choose. The range is going to be wider, but you're still going to be able to bring in decent premium for something that has a wide range like that. They actually brought in 1350. They risked 8650 on the trade. It looked a little hairy, and I kept checking in on the 13,300 puts just to see if the trader managed things. They hadn't touched it last I saw, and you can see a little bit going on with VolQ and the NDX that probably is resting their mind at ease as well.
All right, Russell, great stuff as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.